Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 16th of June 2023. First chart, as usual, is the US dollar index futures. Put some lines in quickly just to see where it's been in the past. Make the chart come alive to some extent. This is where the weakness came in at the highs of the range. The price broke down. This is the recent lows down here. We had a breakout just above those lows. This is where supply was going to be drawn out from. You can see the market's failed to recover back above that level, and instead it's come back to the effective breakout line down here at 102. This is a logical level for price to come back to. It does appear that pretty strong weakness has been drawn out this week. You can see that with the increased spread as prices stretched lower. Volume was quite high. I would expect an attempt to consolidate at this level, either just on this line or just below it. There should be some support drawn out adjacent to where price consolidated previously. So I'd be looking for some form of consolidation in this area next week. And I'll just note that the volume this week was increased due to contract rollover. So this was a little higher than what it would have been otherwise. You can see the contract rollover weeks in here like this. So this wasn't a particularly high contract rollover week, but it was higher volume than it would have been otherwise. Next chart is S&P 500 index futures. This is the E-mini. The important level comes through here. You can see there was quite a period of consolidation and absorption going on through here, right at the breakout level for some time. Price broke out 3 weeks ago, consolidated for a week, pretty much adjacent to this minor high here, and then prices accelerated higher this week, which is what we expected to happen and was mentioned last week in the video, that price would come up and probably test that 4,400 level. Now overhead resistance comes through here, so price is almost stretched up to that level this week. It's not quite there, which is a little unexpected. Normally price moves straight up to the overhead resistance. You might find there's some fine tuning coming in and the overhead resistance is found to begin at this level. We'll have to wait and see. Generally what you'll expect now is either a test for supply to solidify and consolidate, because whenever price moves higher, particularly moves higher over a short period of time, increased supply will be drawn out. There'll be some profit taking from people who bought down lower, down here or down here. There'll be people getting out from positions to the left who have been holding on at a loss for a considerable amount of time. And there'll also be short sales, which are coming in from above. So you'll normally see some supply drawn out on any sort of widespread up bar, and particularly those which have happened in a relatively short period of time. Now you may find, because price hasn't actually moved up to the important level, which is up here, that price does edge higher early in the week, moves up perhaps like this, but then eventually closes lower, closes down nearer the lows of the bar like this. So you'll end up with a bar that looks like a little mini upthrust. We'll just have to wait and see. It'll either be a test for supply or a little mini upthrust, and then you'll get a test for supply following that. But a period of consolidation is highly likely. Next chart is the 10-year note futures, and draw in some lines quickly. Here was the old range here. Here was the next higher range. Price broke down a month or so ago, and it's really consolidating adjacent to where the lows of the former range were. Here are the lows of the overall range at 110. This would be a severe breakdown level. You'd see price really slice lower if this level was taken out. This week price attempted to consolidate, as it has for a couple of weeks now. Supply was drawn out 3 weeks ago, and since then price has been moving sideways for 2 weeks. Spread was a little wider this week and volume increased, but you've had a close pretty close to the previous close. The most likely response is for a test for supply, a nice clear one like this. The market may attempt to move higher, but we've seen on all these bars that supply has been drawn out whenever the market attempts to move higher. So the most likely outcome and the most sustainable outcome would be a test for supply to prove that volume is low before there's any real attempt to move higher. But the market does what the market does. We'll see what happens. Sometimes the most sensible option isn't what the market attempts to do. Next chart is copper price futures, which have had a consolidation in the background quite a while ago now. And price really roared out from that level. There was a test of the breakout here before some more consolidation took place and a secondary breakout. Now here is the previous breakdown line, and you can see that formed resistance through here. Here was the lows of the range, and here was the next breakdown. And price has found support down here. Buying supports come in. We noted it at the time on this bar. Price has then responded higher, and it's recovered above the minor breakdown line here this week. You can see that if you brought this line through there, that's almost exactly where price has consolidated, just in the shadow of that line. Price has moved up. Now, this is going to be the more important line to recover above. If that was the case, it would be a significant positive for the market. But you may find price just move sideways through here for a little period and consolidate for a little while before there's any real serious attempt to challenge this line and move higher. A recovery into this level would be a significant positive. Gold price futures. Gold price futures, similar to the copper price futures, have a accumulation in the background through here. There was a clear breakout. You had a little period of consolidation in response here. There was the next breakdown line there. And there was a period of absorption that took place that allowed price to push above that breakdown line. Breakdown lines are always serious lines to recover back above. They normally are significant and are more difficult to move above. And you can see that price has spent a month absorbing supply, and then it gapped up and moved away from this level. The little gap up is always a sure sign of the market's intent. Price moved up. Now the next level came through there. You can see that a period of absorption was taking place through here, which failed, and price came back and tested the old breakout line for strength. Here's the highs of the range here. So you've got a resistance zone through there. Price did get above it, but supply was drawn out, and now price has come back and is testing this zone for strength, testing the breakout above this zone for strength. And it does look like it's going to be successful. volumes have reduced. Look down here, volumes have reduced considerably over the last 3 weeks. Supply is low and the market is free to move higher when trading conditions are considered favourable. The market could continue moving sideways for a period, but it's now well placed with volumes being relatively low and the slight increase in volume this week suggesting that there was buying in the market. The market did dip lower but recovered to close pretty much adjacent to the previous close. This market appears poised to make an attempt to push higher. Next chart is silver price futures, and similar to copper and gold, there is an accumulation zone in the background. It comes through here, and price broke out here. There's a little period of consolidation similar to gold and copper before a secondary breakout. Now here's the lows of the range here, and here's the highs of the range, and this is the resistance in the background. You can see the market made an attempt to absorb just below the lows of the range before price did break down, move down, similar to gold and copper, tested the breakout for strength before finding buying support down here and then moving higher. Unlike gold, this market only moved up to the highs of the range, highs of the resistance zone, before moving lower and finding some buying support just below or in the shadow of this range. Now, let's just get rid of some of those lines. This week's bar was a very narrow spread down bar on quite high volume. This is generally a sign of buying support. And if that's the case, particularly as gold in particular looks poised to move higher, this market also looks poised to move higher. Now you've got the old resistance zone through here, but it's been severely weakened by this trading in here. So the strength of the resistance in this zone is likely to be reduced compared to what it was previously. I expect this market will make an attempt this week to move higher, and a break above 26, if that was to occur, and it may take a week or two to do so, would be significant. It would be a serious sign of strength if the market moved above 26. But I do expect there's a good chance that the market will attempt to move higher this week in response to the narrow spread down bar on pretty high volume. Like crude price futures have been moving sideways in a range for a considerable amount of time. Back over here is the old lows of the range here. You can see that price broke down below it and then it became resistance, which is quite normal. Since then, price has moved into this current trading range through here. This is the last gasp level of support. Price has been down there a couple of times and recovered each time. Price has been trading sideways for 6 weeks now, and it dipped lower this week and traded kind of like a test for supply. There was certainly testing for supply below the previous close just through there, and it popped up obviously later in the week to close as an up bar on a slight increase in volume. So this suggests some buying support has come in. Now there may be a secondary test for supply. That often happens like this, but the market does appear poised to attempt to move higher. Supply has been drawn out just above it more recently, but that doesn't mean the market can't make an attempt to move higher, even if that attempt was to fail. So there does appear that there was a test for supply in the lower part of last week's bar, perhaps earlier in the week, and the market responded positively to close up and higher for the week on a slight increase in volume, which suggests that buying support's come in. We'll see if the market can use that buying support to generate some momentum and make an attempt to move higher next week. Next chart is Aussie dollar currency futures. We've got a breakdown in the background of the chart here. This is when the US dollar was making its run higher and really caused weakness in associated markets. There was an attempt to support here before the final low was put in, and then there was a recovery up. Price broke back above that level. If we bring this line on further, you'll see that price spent some time consolidating just below the breakdown line here. Breakdown lines are always important lines. When they're recovered, it normally is significant. However, in this case, there was a breakout above the breakdown line, and the market didn't really support this push higher. You can see down here that volumes reduced as price pushed higher. That's not a sign of a sustainable breakout. And in return, price moved lower and moved then into this sideways trading range, which has been trading in for quite a while. Now, price has moved above this range this week. If the US dollar was to continue lower, this market would probably confirm a breakout. However, there's a good chance that this is an equal and opposite reaction to the previous move, and you'll get something like this next week, which is an equal and opposite reaction to this. Then they'll balance each other out, and you'll find price then moves back into this sideways range. We'll see. It's quite likely that'll happen. You see it quite regularly in the markets. The market moves out of a trading range and then recovers back into it, only to do exactly the equal and opposite on the other side of the range. It'll depend to some extent what happens in the US dollar, and that looks like it might move into consolidation mode, which would probably see some minor weakness at least come into this market. And this is Bitcoin futures. You can see Bitcoin futures have some form of accumulation in the background. If I mark it in, you'll be able to see it better. I see it like that. Here was the lows of the original range. I think this occurred, unfortunately, which the market was forced to take into account as it happened. Price completed the accumulation here and began a breakout. Here's the highs of the adjacent range. The breakout wasn't supported here, and prices come back to test the breakout for strength. And since then, prices moved sideways, just absorbing supply. You can see that supply was drawn out down here on this bar, and it was absorbed. Next bar was up. Prices come back to retest that level again, and volume was much lower this time. And this week was a test for supply, almost a mini shakeout, because the low of this week's bar moved below the low of the previous bar, just in there. Can't really see it very well with all my lines, just in there. And price closed back at its high for the week, or very close to it, and it did not draw out much volume. This leaves this market really well placed to move higher next week in response, possibly up to this 29,000 level, especially if trading conditions were proven to be favourable this week. If trading conditions were not very favourable, you probably see a secondary test for supply, but with a narrower spread, something like this, next week in response. But I think given any sort of reasonable trading conditions next week, the market will at least attempt to push higher in response to this week's bar, possibly up to the 29,000 level. And if that was successfully done over the next couple of weeks, the next higher level is just above 35,000. And that's possibly where this market's heading, if I'm correct. And this is a accumulation zone. This is strength in the background, if that's the case. This is just a testing of the breakout for strength. 29,000 is the target in the near term, and that's in here. And the 36,000 is the next target after that. If increased supply was drawn out for some reason, there should be considerable buying support adjacent to where the market has previously accumulated, where this buying has occurred. So there should be considerable support all the way down to 15,000, if that's the case. A break below 15,000 would be very negative, but I don't expect that's going to happen. I expect after this week's bar, price will attempt to move higher this week. We'll just go back to the US dollar index futures quickly to finish up. Put in some lines. You can see where the failure was recently. And here's the little breakout level where price accumulated previously. Now the move back to 102 puts price back where there was support found previously, sort of in this level. So a period of consolidation, or at least an attempt to consolidate around the 102 is pretty likely. You'll see some trading in here. A complete slice below this level would be a real serious sign of weakness. So below 101.5, that would be a sign of weakness, particularly if price proved it wasn't able to recover. But I think the most likely response, at least in the near term, is an attempt to consolidate in this level here around the 102 or fractionally below it and above 101.5. I would expect at least an attempt to consolidate there anyway. Okay, thanks for your time. See ya.